Amazon's bid to acquire iRobot officially ended on Monday, and this has really been a long time coming. Amazon indicated that they weren't going to give concessions to the European Union a couple of weeks ago, and this continues us down a path where acquiring companies, whether they're large or small, gets harder and harder as there's more veto points, whether that's in the US, the European Union, or also in China. So just a few of these acquisitions that have now failed. Amazon's bid to acquire iRobot, Intel's bid to acquire Tower Intel's bid to acquire Tower Semiconductor, JetBlue acquiring Spirit Airlines, and Meta Platforms acquiring a fitness app for its VR applications. And then of course there's Adobe's acquisition of Figma, which was denied just a couple of weeks ago. So it's clearly getting much harder for these companies to acquire smaller, more innovative companies, even if they're just bolt-on acquisitions. I don't think the world was going to fundamentally change if Amazon completed an acquisition of iRobot, but clearly regulators are seeing a reason to not allow these companies to acquire more and more competitors. In some ways, that does make sense, but it brings about a lot of questions about what big companies can and can't do. And what do some of these smaller companies do? It now becomes extremely financially difficult for iRobot to just simply survive over the next few years. So I'm going to get into some of those numbers and exactly what the companies are saying in the wake of the deal falling through, because I think this is going to be a really chilling effect on the acquisition market long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they're going to give you their top 10 stocks to buy right now. Now, I want to start with the market's reaction to iRobot's news. Shares are down about 9% as the market is closing on Monday. And you can see that chart here. Shares actually started even lower, started about 14% lower very early in trading today. But remember, this was an acquisition that was supposed to go through at over $50 per share. $51.50 per share was the latest price that was after a reduction, after iRobot had to take out $200 million just to stay afloat. I mean, this is the position that iRobot is in. It becomes very financially difficult for them to simply survive given their cash flows. So an acquisition like this was really good for shareholders, for the company, for iRobot, and could be an addition to Amazon. So let's look at what the company said upon this deal falling through. Now I'm going to start with this press release from Amazon. The same release came out from iRobot, but this one's a little bit easier to read. You can see that it signed originally on August 4th, 2022, so quite a while coming here. They said that they would have been lowering prices on products consumers already love from iRobot, and then would invest in things like new products and innovation. This section right here at least lays out what Amazon said that they wanted to do. We're believers in the future of consumer robotics in the home and have always been fans of iRobot's products. This outcome will deny consumers faster innovation, more competitive prices, which we're confident would have made their lives easier and more enjoyable. Mergers and acquisitions like this help companies like iRobot better compete in the global marketplace, particularly against companies and from countries that aren't subject to the same regulatory requirements in fast-moving technologies like robotics. What this also does, and this isn't something that Amazon is going to say out loud, is it tells Amazon that they can't acquire these companies, so they might as well build them in-house. If they want to have this kind of asset within Amazon, they need to build and not buy. So given the size of companies like Amazon, I don't know that that's a great outcome from a regulatory perspective. iRobot also made this announcement, and this is where things get really interesting because you see just what a bad position iRobot is in. So their founder and CEO, Colin Angle, is stepping down as chairman and CEO. He'll stay on the board for another year, stay in an advisory role. That's pretty typical, but I think it's very clear that he's being pushed out of the company or just wants to leave, which would be logical given he thought he was going to be selling the company to Amazon. And they're going to be making a number of changes to save somewhere around $150 million a year. Keep that number in mind because it's very important. They're going to achieve margin improvements by basically putting pressure on suppliers, $80 to $100 million in savings on equivalent volumes through the execution of agreements with joint design and contract manufacturing partners on more attractive terms that provide significant reduction in the cost of goods sold. So they're going to lean on their suppliers, basically say, hey, we're not going to survive if you don't give us some discounts. Reducing R&D expense by approximately $20 million. Centralizing marketing activities, consolidating agency expenditures, $30 million. In total, 350 employees, which represent about 31% of the company's workforce, is going to be laid off. Major changes coming for iRobot, and this is not surprising when you start looking at the company's financials. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This chart shows iRobot's revenue in green and gross profit in blue. So gross profit is going to be basically cost of goods sold. And you can see that since 2021, this has been in a steady decline. Now, this is not what you want to see from a business, especially for a business that's getting acquired. You want your company to focus on exactly what it does best and continue operating. And then once that deal closes to get acquired, you can move on with any sort of strategic changes that are being made. But it doesn't appear that iRobot was doing that. For some reason, sales were dropping at a really rapid clip after this deal was announced. If you move over to net income and free cash flow, this is where things get even worse. iRobot was actually in a great position going back to 2021. This kind of makes sense. People were spending money on things during the pandemic, but then coming out of the pandemic, things started to get a little bit worse. But by the end of 2022, the company was losing almost $300 million. And on a trailing basis right now, they've lost $325 million over the past year. That sort of financial performance then starts to put a strain on your balance sheet. And this is where things get really concerning for iRobot. This was always a company that had plenty of cash on the balance sheet, generating a little bit of cash. So it was a pretty solid and relatively conservative business. And then suddenly, over the past year, it adds $200 million worth of debt. And this is what ultimately becomes a concern for the company now, because your foundation is no longer as strong as it was from a financial standpoint. Your revenue is not what it was. And now you become a debt-laden turnaround play. That's fundamentally what iRobot is today. This is not a company you're going to look at and say, oh, it has a good valuation on a price to earnings basis or a price to free cash flow basis. This is a company that is losing money, burning cash, having to reduce its workforce, both R&D and sales and marketing spending, and it has debt. There's a lot that needs to happen for this company to be successful and not continue to go down this negative path. So there's a lot of questions the company needs to answer coming out of this deal. And I think what's really too bad is that iRobot is a company that was on pretty solid footing before the Amazon acquisition, and now there's very real concern that they might not be able to survive this. There's even more competition in the market. You lose out on a potential partner and a company that could help you innovate even faster and fund some of those innovations. So frankly, this isn't a stock that I'm interested in buying right now, but I'm going to watch what this turnaround looks like, because iRobot, as a company that is standalone, that has to be standalone, isn't going to be able to fall back on that Amazon acquisition money or strategy changes. He's going to probably be a very different player, make very different investments than they would have previously. In long term, maybe that's good. Maybe that's a better position for them to be in. Not something that I think is warranting an investment right now, but definitely on the watch list. So what do you think about this deal, the state of acquisitions, especially for technology companies, and iRobot stock? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.